that people who didn't get on will have a chance to look at it, and it'll give you a chance if you want to go back and review it. So what I'm going to do is I'm going to share my Impulse screen, because that's what we're going to be watching for and looking at to begin with. Can everyone see that?
Yep, you got it.
Good. All right, good. So basically, this is what Impulse looks like. Everybody knows what this is. You get it at impulsestrategy.im/impulse right here. You've got your markets marked up on the top left here: Forex, commodities, digital indices, stocks. And you also have that over on the right-hand side here, which is up here: Forex, commodities, which is where you're going to find your gold and oil are the most common ones, but people also trade platinum, silver, and some people trade copper. That's where you're going to find those. Let me just admit other people as they come in. Forex are going to be your Forex pairs, and obviously you can filter these by strength. I have some of the ones that I commonly use. I can put a star by them so they're always at the top. The only one that I would look at here, which is near the 40 mark here, is USDJPY. It's a downtrend, down strength, and it's going down a little bit. This number's got to be over 20 to even look at it. If it's under 20, don't bother. If it's over 40, that's really a stronger trend. You can filter it here. So if you want to filter it by trend, it'll come up there. If you want to filter it by strength, it'll come up here. And all the top ones, the highest one we've got is Australian dollar versus US dollar, which is 39. That's because it's a Sunday, and obviously we don't have all the markets open. You know, we're only trading Asian range at the moment. So we get much more volume when London and New York are open. They're the two big ones. But we can trade Sundays, and it'll show some nice setups. I'll go over this one here, Euro USD, and we'll go over some basics here. Other things that we'll look at here. You know, these are your time frames that we look at. I'm a scalper, so I'm usually using the 1 minute. But if you look up here, the strategies, scalping here, intraday, swing, or position. So scalping is minutes to hours, intraday is several hours, swing is hours to weeks, and position is longer term. I only scalp. So everything that I do is linked towards scalping. If you intraday or a swing trader, then you know, adjust accordingly. So let's just look at this to begin with. Back here, we were in range here, as you can see. The market open. Started at 3 o'clock here on a Sunday. These are your higher highs and lower highs, lower lows. That is indicated by when you put these on here. But the important one is this macro trend one here. That's the most important one, and that is this one. When you turn that off, you won't see it. It's clear to see, because it happens when you go from a downtrend to an uptrend. So when the trend reverses, that indicator there, the macro trend, is what you're going to see.
As a pros, you go to the MC. I'll be expecting that.
Okay, who's got the?
I have a contact there. You go there.
Okay, as Maria had some background noise there, I muted her. So that's what we're going to look for. Now you can set this up under notifications. I won't do that today, but you go under settings here. This will bring up your tutorial. Again, you want to watch that as often as you can. It's very quick. just PDFs, go through that each time. I don't have this checked because I want it to come up each time I open it. But you can, on settings here, you can set up notifications. So I have notifications on, and I have these symbols. I have these symbols here on my alerts. I only have it on the 1 minute. So when that when we have the uptrend and downtrend arrows going on, like right here, that I will get a notification of that. That on its own is not enough to take a trade. You must have, especially in the beginning, you must have 5 indicators, 5 signals telling you that this is the time to get in. So that is certainly one signal, because we're crossing from the red into the blue. So on this blue line, obviously that is your first signal. Everybody knows that's the first thing we look at is, what is that? Is it blue or is it red? If it's blue, we're looking for all blue signals. So we want blue arrows. We want this to cross the blue here, and we want the RSI to be in the blue zone here or above. Okay, so that's number 1. Number 2 is we're looking for a crossover up through the blue. So in this case, we're going to be looking here. So this is another one. It happens right here. The blue crosses over. On the stochastic, the line crosses up through the blue. So if it crosses up through the blue or bounces off the blue like this or this, they are buy signals. When it comes back down through the red, it's a sell signal. So because we're now on trend, we're in buy trend, we're only looking for blue signals right now. Don't go counter trend if you could possibly help it until you get more experience. When you're experienced, you can take some little pullbacks like this. Certainly you could take this when you get more experience, but don't take them when you're beginning. Don't bother. We're only looking for buys. The next thing that we're looking for is we're going to be looking for the crossover from red into blue. So right now here, if you follow the dotted line up, this crossed over on this red arrow here. That's just an early indication. This is saying, hey, John, looks like we're about to change direction and go up. So that's number 1. We know that we're in an uptrend. That's number 2. We got this arrow coming up here. That's number 3. We've got red arrows here, which obviously we're looking for blue, so we don't want those. Ideally, we like 3 red arrows beforehand, but because this is in range, as you can see here, the blue and the red is going in and out of each other. Oh, hold on, I've got a few people trying to get in. Let's see who I've got there. There we go. So we're looking for blue arrows. So there again, there's another indicator. We have a blue arrow there. So now look what we've got. We've already got 1, 2, 3, 4, 5 indicators. We're actually now going to get the 6th one, which is the crossover. I'll do it here. The crossover of the blue to the red there. And then that's your entry there. So you've got 6 indicators saying this is a good entry. We're on Euro USD up here, and we would be in that trade right there. Okay. Then as you follow up, we stay up, we stay up. This might get you out because I don't like being in trades in the white zone. I only like being trades in the gray cloud. This is the buy cloud up here. The one at the bottom down here is the sell cloud. So we did come out here, but what you notice down here is that we didn't cross down through there. and we bounced off the blue there. So we are still in blue territory, okay? And down here, we notice all this is in blue territory. So we could stay in it. It's not bad to stay in it because we're still in the blue all the way along here. Does that make sense for everyone, hopefully? The other thing that we look for, which is actually this another 7th indicator we can do this, is because right here we have Bollinger Bands expanding. That's another signal. Bollinger Bands expanding. So we have 1, 2, 3, 4, 5, 6, 7 indicators here. We only need 5 saying this is a position to go in for a buy. And you would be in that buy, certainly as long as it stays above the blue line. But you can stay above the red line too. If it drops below the red line, you're out. If you want to be cautious when it goes into the white area, you're out. If you see a bearish engulfing candle, which is this one here, a bearish engulfing candle just means this candle is bigger than that candle. It engulfs it. That is an exit sign. So you could have got out there. You would have got straight back in here again because you're still in the blue down here. If you stayed in, that's not a bad idea either. You would stay in all the way along here. It's in the gray zone, in the gray zone, stays above the blue line, in the gray zone, in the gray zone. But here, look at this. This one over here starts coming down through the red. So that's giving you a warning over there that we've gone down through the red about here. So now we're kind of finger on button looking to see if there's an exit. We faff around a little bit. This candle here is definitely an exit. Shoots all the way down, shoots down and touches the red. We would definitely be out there. You would probably be out, worst case scenario, when it crosses about there, I would think. Does that make sense to everybody? And so your profit on this would be from your entry here up to there. Okay. And then you would get out on that candle and you would be out. It retraces a little bit here, but there's an argument you could get in on one of these candles here, because I'm going to clear all the indicators. Hopefully you took notes on that one. Because now we've got another setup here. So right here, again, don't forget you can take several trades in a run, but we've got, what have we got here? We've got a blue crossing here. We are still in blue, in uptrend. We jumped down here temporarily into the red, but we went straight back up out into the blue again. These are all red candles. Remember, I like to see 3 at least of these. We've actually got 1, 2, 3, 4, 5, 6 before that blue candle. So that blue candle is another indicator there. Got a blue candle there. We've crossed. When I see a candle crossing both the red and the blue, I like that. So that's another signal there. We see the blue line expanding away from the red line. So that's another continuation signal that it's strong. And obviously we are heading up. So you could have taken it from this area here up to probably around here. And so you would have made another, you would have got in probably here, and you would have made profits up to about there. And then you would have got out. Okay, we're only looking for buys, so we're ignoring all this. But now we're looking, we got some more setups here. Look, red candle, red candle, red candle, red candle, red candle, red candle. There's a blue candle. So let's go and investigate that. Let's take this out. This is a good example. So in this, don't forget, this is a 1 minute chart. So our first entry was here at 5:05. And we got another entry here at 5:44. And we're going to have another entry here right about here at 6:08. So pretty much in 1 hour, you've got 3 trades that you took and were all in profit. So hopefully everybody sees that. And that's basically how we're going to be trading on anything. Doesn't matter what it is. Anything setting up on gold yet, Tony, to look at?
Yeah, I was actually, there was a crossover about 6 minutes ago and a new trend arrow for a sell, and it's
Okay.
actually been going down. It's melting.
Okay, let's have a look at, let's go and have a look at that then. So we're going to go here to commodities. We're going to go to gold. It's one of my star ones because we're looking at that. Here's the arrow that Tony's talking about. So this is it here. It's your macro trend arrow. And here is the macro trend, goes through this trend line. So all the way along here, you can see this is a blue line. So all the way along here, blue, blue, blue. You're looking for buys, you're looking for buys. Now it's changing. And right here is when it goes through and it becomes a sell. So you've got a signal right there. There's one. You've got a drop. Again, you've got a drop telling you that it's coming right here as it dropped through the red. Because now don't forget, if we're looking for sells, we're only interested in the red color. Red arrows, red bars, red area on the RSI, the red line on the stochastic. So we got 1, 2. Let's go and have a look here. Again, we've got the drop through on the red right here. So we got 1, 2, 3. We've got the macro trend arrow has popped up, which is this one right here. We've got the crossover of blue and red right here. And here we've got several blue arrows. All these are blue. 1, 2, 3, 4, 5, 6, 7, 8 blues. We did get a red, a couple of reds in between, another blue. You could have got in on that red one. Well, actually, that was nothing, no direction, no red or blue. You could have got in on that one, but the blue hadn't crossed the red. So this is your pigeon right here, where the blue crosses the red. And you would have been in either on this candle, but definitely on this candle. And you would still be in it. There's no reason to get out. We're still in the red here. We're still below the blue here. We're not even touching it. We're still below the red line here. And this is a common mistake that a lot of people do, is they get into a trade and they think, well, it can't go much lower. I'm going to get out and take my profit. And that's not what you want to do. When it's running, just run with it. There's no reason to get out of that. It's all red arrows. We're all well below the blue line. We're just melting here. This is a lot of money on the table. 214 down to 210 right now, depending on your lot size. Probably a lot size that I trade, I would be $400 up on that trade already. And that is as clear as day, that trade. Absolutely as clear as day. There's no question that that's the trade to take. And you would take it from here. Oh, hold on. You would take it from here and you would still be going. Now we're looking here because we're angling up through the blue. This is starting to come up. If this candle gets bigger than the red candle, I would get out. If it doesn't, I would stay in. And the other thing that you can do always is you can throw a fib on it, which is over here. This is your fib tool. You come up here, you get a fib retracement. You start at the beginning of the run of color. Run of color means the candle's all the same color. So in this case, there's our first candle, and we're running it all the way down to the bottom of that red, including the wick. So we're actually not going to be nervous until it hits this 0.5 range. If it goes in the white area or crosses this blue line, I might get out there. If this candle gets bigger than this red candle, I might get out there. So impulse is telling you when to get in, but it's also telling you what to look for to get out. So right now I'm still in, I'm still in, I'm still in. Now what happens when I put my stop loss here, I might have put my stop loss, sorry? I might have put my stop loss, let's say here, which is just above the swing highs here. I want to be above those. I can put PSARs on here to show me where the stop loss is going to be. But my stop loss will be there. And then as it runs down here, once it gets down to about here, I'm going to move my stop loss. Bear in mind that my entry was conservatively here. Okay, so when I go down below that, I'm gonna move my stop loss, and I'm gonna move it down to break even right there. So no matter what happens to trade, see this candle, I would be out on this candle because it's bigger than that one and it's going back up. See that? So I would have got out right there. When it broke the top of that red candle is when I would have got out. Doesn't mean I can't get back in again as it goes down, because this would just be a small retracement, especially if it bounces off this 50 of the fib, which is not even going to touch. And it'll carry on down. So I would have got out here, but now I'm looking to get back in. What will happen to get me back in? This line here has got to go above the red. Then it comes back down through the red. And so it'll go like this and then down here. And I'll get in right here as it crosses back through the red, as long as it stays in the red down here. I'll take that out of the way. Remember this here? I'll take that out of the way so you can see it. So when it comes back down the red here, I'll go in for another sell, if it does. But in the meantime, I've now taken a profit on this from here to here. And that was in 33 to 43. So that's 10 minutes. I went from 21.14 to 21.11. I would have made $300 on that trade. If you're trading smaller lot sizes, which you should be, you would be $30 maybe. Really tiny lot size, you'd be making $3 on that. Don't forget, we're looking for percentages. So our daily percentages that we're looking at as a gain is 1 to 3%. Okay, so if you have $1,000 in your account that you're trading with, on that move alone here, you'd have made $30 in one trade. You'd have been done trading for the day in one trade by following the impulse signals. And, you know, the other signals that you saw here, quite obvious. Bollinger Bands massively expanding. The further apart the Bollinger Bands come, the stronger the move. So when they're a slight opening here, you're going to have small movements. Bigger openings here, you're going to have bigger movements. And a much bigger movement here on this side, you can see, gives you a lot more pips. So does anyone have any questions about that at all? Is everyone clear what we did this? If you want to unmute yourself or go in the chat, let me know what you think about that.
Well, I'll say something. I made $60 right now in 2 minutes.
There we go.
Yeah.
Just following that. Now, don't forget, so over here, you know, where this line tells us we're only looking for, okay, we got some chats. Let's have a look at the chat here so I can see what we've got going on. Understood. Good so far. Yeah, opposing arrow strategy. Exactly, Ray. This is a classic example. Here, what we're looking for here, we've got red arrows, Ray, exactly what you're saying. Red, 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 red. We're not interested in any of those until we get a blue arrow. This drops down through the red, and this has got to get back. It's now gone into the blue, and it's got to get back in the red. We're very close to the trend line here. So if it carries on going up, and breaks this line, then we might start looking for buys if it's that much of a retracement. I did remove that fib when I got rid of all the other signals. So let me put that back on again where we were before, so that I can show you we broke the red here. See that? So this might be not just a pullback, this might be a reversal. So when it breaks this red, now we're unclear whether it's a reversal, which means when it goes through here, this macro trend arrow will change to blue. It'll appear under here, and we'll be on a buy trend. And this often happens when price is very close to the trend line and it's going through it, like here, coming up, going through it, and like that. Yeah. So, and if we put these macro pivots on here and the micro pivot, you'll see there's our micro pivot. If it breaks above that, we're definitely looking for reversal. Here's our we'll put this one on as well. We've already broken the micro pivot. So we've broken the 50, we've broken the micro. We could break the trend line, and we've broken into the blue here. We haven't gone through the red yet. It's bouncing off the red. And it might just stay up there now. So if we get a macro trend arrow here, the blue is also just about to, let's move this out the way a little bit. The blue here is just about to cross the red, if you see that. And if it does that, this carries on, it'll be up in the gray zone. It'll be above the trend line. The blue would have crossed the red. We've already crossed here into the blue. We crossed into the blue back here, although this was too early to get an entry. So if this continues up, we'll be looking at getting in for a buy. So that's how we look at these. Hopefully that's clear to everybody. Does anyone want me to go over anything else? Because both of those examples that I went through are pretty clear about how you can see at least 5 signals, sometimes up to 8 signals. The more signals that you get, the stronger it is that you're going to get in for a buy or a sell. If you don't get 5 signals, don't take it. Good, good, good. And that is the crux of the matter. I mean, you know, that 4-minute video and the 20-minute video that I was talking to you about, we'll go over this. These other things up there we'll go into at a later date. We've already gone through the macro pivot and the micro pivot and the macro trend arrow. We've also gone through the fib. You don't need to know all these things. These are just extra confirmations And as you get more comfortable with the basic strategy, you can start adding those layers on. But always trade, look for your risk management, look for your high probability trades. High probability trades are going to be with trend and at least 5 signals. Simple as that. Don't overcomplicate it. It's just as simple as that. If you're not with trend and you don't get 5 signals or more, don't take the trend. Now, what does that mean is you have to have patience, because, okay, we've seen here that we can make $30, $300 in 10 minutes. But if we were back in this area where we're in range and going in and out, we wouldn't be taking any of these trends, any of these, because there's not enough signals in them. This is just range, all this in here. So everything, we were in buy, remember, here. So anything from here all the way to about here, when it changed direction, none of that we would have been in. If you're experienced, you would have taken a sell trade here. But right now, don't take anything against trend. It's not worth it. It's not high probability. You will get hurt more times taking trades against trend than you will taking trades with trend. And you see right here, we never broke. We never got a new macro trend arrow. We bounced off the trend line. We're coming down. Okay. We got blue arrows, but we didn't break the trend line, so they're invalid. We're also in this white area here. So when we're in this white area, that is also an area of indecision. The white area between the gray Bollinger Bands is an indecision area, so we're not that keen on it. We did get almost a crossover here, but look how, let me zoom in here. Look how tight that blue and red line is. They're not really crossing. It kind of just crossed, but it's, you know, it's not real positive. We did get a jump off the blue line here, so we might get a retracement, and now we can actually get rid of this fib here. Let's get rid of this fib here, and we can actually draw another fib from run of color, which is from here up to there. And you can see that we've gone from there. We came back, we didn't get anywhere near the 5, and we're going up. So this could well be the setup for the trend changing. And it'll be a reversal. We got a macro and micro pivots are both down here. We're staying above those. So if we're above those, we're looking for buys, and below them we're looking for sells. Yeah, macro is not the gospel, Maria. The number of signals you get is more important than whether the macro is included in it or not. The macro is and can be one of them. But you can certainly be, if I go back here, you've got this macro here, which indicated this one. That's why I put my settings. So when you go up here to settings, and you turn your notifications on and off here, I just have it on the 1 minute. When you turn them off, these indications all tell me that the macro trend changed. And the reason that I do that, you also have to go into IAM Academy here, by the way, and go to your name over here and go to notifications. On the normal page, it's there. Let's see if I can go back to show you. You go in here and your notifications will be on there. I've already got it on, so it's not showing. And then they will show up on those for you. So yeah, as a macro, a lot of these, Maria, especially the macro trend, is basically giving you the heads up on what might be happening. So when we were on, actually we were on gold. And the macro trend, I'll show you. The macro trend, we would have got the latest one. Put the chat over there. Your macro trend is there, but your earlier macro trend when it went above here would be right here. So this here, you would have got one here showing that it's going up, and you would have got one here. You actually probably would have got a down one here, and you probably would have got an up one here. So what happens is, let's say you come into the trading and you're over here, the macro trend is way back here. So it's not an indicator on itself, because the macro trend is just basically pointing out to you that this should be blue. We're above the trend line. That's all a macro trend arrow does. You don't really need it, but it's a good indicator to remind you that you're in an uptrend or a downtrend. But the color of the trend line is enough to tell you you're in an uptrend or a downtrend. Okay, so we're in an uptrend there, but let's say you didn't come in the market till here. There's a signal to go into a buy. You would have got out here on this engulfing candle. So you would have got a trade from here and got out here. You're still in buy trend, so you're not going to take any sells. And start stretching this out. Here's your opposing candle system here, Ray. You've got 1, 2, 3, 4, 5, and then a blue candle. You've got the blue cross here. You're in blue here. You bounced off the blue here. So there's another entry here. You would have got out when you got this engulfing candle here. Actually, you could have got out a bit earlier because it went into red here. You would have got back in here. You would have stayed in. I probably actually would have got out on this engulfing candle here. So you would have got here. This you could have been a continuation. I probably wouldn't have bothered. All this is against trend. You could again have got back here. This blue candle went through both the red and the green, the blue, and touched the gray. That's a signal for me. So I would have been back in for a buy here. I would have been out on this engulfing candle here. I would have been back in roughly here. I would have got out on this engulfing candle here, and it's going into the white. This is all against trend, wouldn't have been any of that. Now we're going into range here, and then we're back to the current one that we saw here, is going into a sell mode when it crossed here, and we took all these pips here. Now this is indecision. We're in the white zone. We're kind of in the blue, but we're drifting in and out of blue and red. But it does look like we're going to break up here, break above the trend line here. We're solidly in blue now. We did cross over right here. So an entry, there's an argument that the entry, when it crosses above this line and stays there, you could be in for a buy. If it doesn't stay there or it doesn't cross over and stay there, then it's invalid. Is that clear to everyone? Okay, I'm going to wrap it up here. We're going to go for questions. If anyone has any questions, you can unmute yourself. If you want to ask questions in the chat box, we can do that. But I'm going to be running these today. You're welcome. Today we ran at 10:15 this morning. I'll probably do it a little bit earlier. It was only because I was watching my English soccer game early, and it ended at 10:15. That's why I did it then. But the Zoom this evening, is this a good time for everyone? 6:15 or is 7 o'clock a better time? I'm thinking more maybe 7 o'clock is better. What's everyone think? Either time? Okay. Okay, that sounds good. We can do that. I'll figure it out. I might change to 6 o'clock. We'll see. I also might do I might do it on a Wednesday evening as well, maybe about 6 or 7